Hi, this is Adam Hughes, and I'm coming to you from the digital studios of Market Club, and we're once again looking at the S&P 500. The symbol is INX on Market Club, and we're looking at a weekly chart. I want to give you a big picture. We've looked at this before, but I think it's a good time to revisit this. We obviously had the highs back here, and the move down from this level, which was basically October of '07, all the way down to March of '09, was approximately 18 months. The recovery we've seen from the lows in March up until the present day is about 8 months. I think we are looking at potentially problems around this area. We've talked about this before. It's a Fibonacci level. We've already drawn the Fibonacci retracement levels. We've gone past the 38.2%. We've touching and kissing the 50% level, and the 61% is just not that far away. Now, having said that, one of the other indices that we track, the NASDAQ, is way above its 50% level and getting close to the 61 or 61.8% to be precise level. The Dow has basically retraced back 50%. Now, this is not unusual in a bear market to have a retracement like this, and then for the market to eventually start turning down. One of the clues that we're looking at right now is right here. And this is the MACD. It's a MACD, or MACD is referred to it sometimes. It was developed by Gerald Appel, who's an old friend of mine, and you can see basically how it's been losing momentum as the prices have been going higher. Now, eventually, I think what will happen, in fact, I'll show you this. I'll take everything off the screen. I'll show you, we'll scope this in a little bit further. And it's easy to do with Market Club. You just click here. You see how we just move right in. But you can see how close this is getting in terms of the indicator sloping down like this. I'm drawing this freehand, so bear with me. Eventually, I think this blue line here will go below the red line, which is an indication of further weakness. But you've been seeing this sloping down. If we just do the opposite here, you can see how prices have actually been going higher. Now, you could say, well, it's just mumbo jumbo, it's a technical thing, but the reality is the internals of the market are becoming weaker and weaker. Every time we make a new high, you're not seeing a corresponding high in the momentum, and that's something that technical traders watch very, very carefully, and this is a very technically driven market right now. It's certainly not driven on fundamentals. So let's just take this off the screen, and we're going to go to a daily chart. We're looking at a weekly chart, so we're going to go to a daily chart. And I'm going to scope this in even further, so that's exactly what I'm. As you can see on a daily chart, the momentum is still, at least for the moment, moving higher. But one of the things I wanted to bring to your attention, if we go back here to August 25th, which is right around this period here, and then the next time period is September 23rd, and then October 21st, which is right around here, and we count these days between this high and this high, and if we use an average of 21 days, I think we're doing very closely. So we're right now, from here to here, we're at 21 days. So if we follow the same pattern, then we're going to see a downturn like we saw here, like we saw here, and like we saw here. So that's the type of pattern I think we're in right now. So a couple of things lead me to believe this is going to happen, but I want to show you something else that's occurred that I think could be another tip-off. Now, remember, the major trend in this market is positive right now. So let's just take everything off the screen and scope this in a little further so you get a really close idea of what's happening. This is what's happening is a very interesting formation, or candlestick formation, I should say. We like to look at candlestick charts because I think they were very informative. These are Japanese candlestick charts developed by the Japanese centuries ago to rice trading, and you can see right here this line here is very telling, just as this one is and this one is. It means there's a balance between sellers and buyers. Where we close today, I'm doing this during the day. It's approximately around 2:30, and we're currently trading around the 1,106 level on the S&P 500. Now, if we see this market come down and make this a solid red line, for example, and close down here, this is not going to be a very good sign overall. One, we've got our 21-day cycle in place, potentially a doji line. This is a what they considered a doji, D-O-J-I. That is usually a reversal pattern that if we scope this out even further, I'll give you some other examples of that on the top. So let's just take this off the screen. Let's scope it out just a little bit further, and you can see, maybe we'll go out a little further as well. So these are the patterns I wanted to show you before, because I think they're telling and they do give some clues as to the market. These are all doji lines here. See how they basically imbalanced, the market fell down. Here you got a smaller one. We saw the market fall down. Here, not so much. I don't see anything there at all. But certainly this particular dark cloud cover, which is another. I love the Japanese with their names, but they're certainly very, very up on these markets. Again, these happen at the bottoms too. You can see these type of formations turning. So I think right now we're in a position where we may be rolling over. I think it's going to be very telling the next few days in this market, and I think that's going to be the key. But let's just leave the S&P as it stands. We're looking potentially for some sort of pullback, similar to these pullbacks right here. So let's see if history repeats itself. Let's see if this 21-day pattern repeats, and let's watch the market very carefully. This is Adam Hewison for Market Club. Thanks for stopping by.